Mark Henry from Alloy Wealth Management. Mark, can you hear me?
I can.
Okay, cool. All right, let's talk about this. What does a Russian invasion mean for the markets?
It means we're off to a really rocky start for this year. Unfortunately, when you have things like a conflict that's going on right now, people panic, and panic involves selling. And we saw, wild swings in the market today, and the Dow finished up, basically flat, but a little bit up after being down over 800 points at one point. But it's the unknowns that cause people to panic, and unfortunately, that creates great market swings.
Now, obviously, there are people who are worried about this, but some people, they're not even paying attention. Why should we be paying attention to Wall Street at this point?
Right. Well, several factors come into that question, but the reality is how it's going to affect our money. So people aren't watching sometimes that should be, but inflation is this is going to cause inflation to continue to rise. Keep in mind, Russia supplies approximately 12% of our oil supplies come out of Russia. And so we're already seeing energy prices rise around the country, and this is going to cause it to go even higher.
A lot of people, I think, when we talk about inflation, at least now, because we've been talking a lot about oil prices, are there other major economic factors aside from oil that are influencing Wall Street at this point?
Absolutely. There's several things. We had rising rates that may or may not be able to happen. Inflation is absolutely affecting it. And then also keep in mind, Ukraine and Russia do provide a lot of the wheat supply and commodity supplies to the U.S. and not just the U.S., around the world. And so this is going to affect global. It's a concern for everyone. And so this has great effects overall on our pocketbooks, as we're already dealing with extremely high inflation.
And a lot of people might have kind of a knee-jerk reaction to what they see happening in the market as things fluctuate. What do you say to people in terms of managing their emotions and their decisions when it comes to investing at this point?
Yeah, really the thing to think about is be an investor, not a trader. So a trader is someone that's going in and out of markets. You can't time the markets. As an investor in your 401k, your 403 and stuff, now's the time to be investing when the markets are down. You want to continue to put the money into the markets because you're doing what's called dollar cost averaging. So if you're an investor, that means you're going to be in it for a long time, and there's going to be really good fun times like last year, and there's going to be times like we're in right now that are painful.
All right. Mark Henry with Alloy Wealth Management, thank you so much for your insight. We really appreciate it.
Thanks for having us on.
Absolutely.